This number now, if the Fed is truly data dependent, the question should be, why not 50?
The mythological unicorn that is Fed rate cuts is finally here in September, the year after the halving. Some call it fate, some call it destiny, some call it pure dumb luck or just a bludgeoning by the US president. But we are finally seeing the data that's going to allow for no excuses for the Fed to cut rates. Because the PPI data, the poly market odds, the critical US 10-year yield rate, the official Fed interest rate projections, and a ton of historical data are painting a picture that we are coming into the risk-on part of the market, not just here in crypto land, but throughout the markets in the stock market and beyond. Because lower rates mean that money will flow from safer instruments, from safer assets into riskier ones, seeking increased amounts of yield and increased amounts of exposure as the economy flips on into a hot mode for the first time in over 4.5 years. There's a reason why this cycle has felt so different, and today we are going to explain that we are right at the brink of flipping on the golden alt season switch that we have been waiting for what feels like forever. And this isn't magic fairy dust. This is hard data that we can point to and show you why we're about to see a regime change. And we're going to be talking about my strategy and how it's changing over the next few days and weeks, because this, my friends, is what I have waited for, what I have been beating the drum for on this channel for what feels like forever. If you guys are excited, make sure to destroy that like button and let's jump in. So first and foremost, what is the data that happened today? As you can see, Geiger Capital is dropping the ice cold face on us. As he says, PPI month over month is minus 1% versus plus 3% expected. This is the hot print that a lot of people thought we were going to get in the price producers index. Now we have CPI coming out tomorrow, probably when this video airs. And if that is in line, we can expect a very significant rate cut. And the question is not if we're going to get a rate cut at this point, because the data is showing that inflation is not a problem. The data is showing instead, with jobs being revised to almost negative, people are now talking about, are we in a recession right now? So all of the bullying by President Donald Trump against Jerome Powell has come off very political. We know Trump wants the rates lower to boost the economy, but a lot of people thought maybe the data isn't fully justifying it yet. Unfortunately for Mr. Jerome Powell, now the data has turned against him, and there's absolutely no excuse. And if for some reason he digs his heels in, he will become a laughingstock and the reason why the country may plunge into a recession, because he's keeping rates artificially high. You can see here the poly market odds of a rate cut in September have a 25% or 25 basis point decrease, which is a cut here at 82%, and a 50 basis point decrease at 16%. I think 50 basis points here is probably undervalued. This will change depending on what happens with CPI tomorrow, most likely before you see this video. So if CPI comes in cool or under expectations, this 50 point decrease might actually jump up. What's crazy is we just had a blowout 10-year auction. Now, what this means is that there was a ton of demand for 10-year treasury yield, meaning that people have high confidence that the rates they're getting right now are good rates, meaning they think the rates will go lower in the future. That's what high confidence or a blowout auction means. It means that for the first time in a long time, people want to buy this long-term debt from the government because they think, hey, the rates are going to go lower. This is actually a chance to get a good yield on my 10-year node, because this is probably a good entry point. And why this is so significant is because the 10-year dictates almost all of the economy. Specifically, it dictates real estate. If you want to get a mortgage on your house, the 10-year yield is what's going to determine your mortgage rate. For the most part, that is going to be the most important number for your ability to buy a house. So as the 10-year drops, meaning that there's more demand, meaning they have to pay less yield to get people to buy it. The actual demand curve for bonds is kind of inverse. The more demand, the less yield you have to pay. You can think of this as a loan from the government. So if you have a bunch of people who want loans, the market says, hey, look, a ton of people want these loans. Everyone wants these loans. We're only going to pay you a small amount of interest if you take these loans out. But if there's not a lot of people who want the loans, the amount of interest they have to pay to bring in buyers of that debt goes higher and higher. You go, okay, we'll actually pay you 4.5%, 5%. And then some people will step in and go, you know what, that's a pretty good yield. I'll actually take that bet. But as demand increases, the amount of interest that the market demands goes down. So this is really good if you want to buy a home, because that means the amount of interest you have to pay on your mortgage mortgage goes down with the 10-year. This is pretty much the most important number in all of finance when it comes to the housing market. So this could be the trend that starts to reawaken the housing market, and we'll talk about what that means on a different video. It's quite possible that all of this stagnant demand that's been on the sidelines actually comes on, creating a momentary dip, but over the long term, this will stimulate higher prices probably, but it will make it more affordable month by month for people to buy those houses. Okay, this is also very interesting because you can see here that the expected 3-month average SOFR, you can see that right now we're sitting at the 395 to 404 range. This is coming down all the way by 2027, and this is from the official Atlanta Fed website. You can see that it's coming all the way down to essentially 200 basis points less, or 2% less. Obviously, they have the band here, but we can expect that it can go as low as that, and we know with Trump's new Fed chair replacement, he's going to be in charge of slashing this as low as we can get it, because the lower this goes, the more stimulation there is in the economy. And so again, if you don't have the risk of inflation, which the PPI is showing a cool print here, the more you have inflation de-risked, the more this type of stimulus and this drop in interest rates is actually a huge net benefit to assets and the economy, to small businesses. Now, once again, we've been talking a lot about the business cycle recently because I have a theory that this whole 4-year cycle we've lived out in crypto has just been coincidental to a degree with the business cycle. There's a lot of data to suggest this. And one of the reasons why I think that this cycle could last a lot longer is because we've had such a long period of artificially low rates. You can see this blue line has been so low compared to periods in the past in crypto history. We haven't seen it this low since pretty much pre the great financial crisis. So in all of crypto's history, specifically the mega bull runs, the mega altcoin bull runs, you can see here in 2020, let me bring up my screen recording so you can see here. In 2021, you can see that it was way higher, this blue line. And you can see in 2017 as well, it was significantly higher, as well as in 2013, you can see it was significantly higher. But we've been so artificially low here, but this line has reversed and is reversing. And you can see that the trend on sentiment is also reversing. Meanwhile, here's a great thread by Julian here saying, here's what a classic late cycle economy typically has. It has manufacturing extreme sentiment with ISM over 60, or at least at 60. ISM has been under 50 for the longest time in history. We've talked about this on prior videos. The services sentiment is extreme. Home builder sentiment is extreme. Consumer confidence is high. All of these things are not present. I don't know if you've checked, but everywhere I go online, you see the wall of worry. Everyone thinks Nvidia is overvalued. AI is in a bubble. It's not justifying these valuations. The stock market is expensive. Everything must go down. Housing is too expensive. Everyone is so concerned. No one has high confidence. So whenever Nvidia misses in earnings, if they do miss in earnings, which they thankfully haven't, but everybody always assumes that if Nvidia misses in earnings, the entire economy is just going to literally collapse. And that type of extreme nervousness in the system is not the makings of a top in the market. It's the makings of either an early cycle or a mid-cycle point before you get the flip to extreme positive sentiment, okay? So this is partly why you need to understand my thesis on why I think altcoins and crypto, which by the way have been mostly bought by institutions on Wall Street this cycle, why I believe we are still early in this cycle. And I'm going to show you some more data to support that, and why I think this cycle will last longer than this Q4 in 2025. I think we're going to see it stretch out and be working in tandem for the most part with the business cycle. Now, of course, there will be peaks and there will be euphoria moments, but I think much like we've seen before, there will be moments of heat and cool off, but it will be a larger, bigger cycle that builds hopefully for a lot longer. But regardless, we'll get to that in a little bit. What I want to show you is this. Peak cycle, meaning the top, is where the ISM rolls over from over 60 to sub 50. We're not even over 50 yet, by the way. Inventories unwind, demand cools, supply and demand reset, inflation pressures ease, and the cycle eventually recovers out of the slowdown or recession. However, based on this full set of indicators, the data is pointing to something very different. This does not look like an above trend late cycle economy. It looks more like an early cycle economy trying to build momentum. And this is something that our Gigabull, Tom Lee, has been trying to point out, is that we had a massive wipeout in 2020 with the COVID crash. We had a massive wipeout in 2022 with an extended bear market in the stock market and in crypto. And we've recently had a massive wipeout in 2025 at the beginning of Trump's term with Tariff Palooza. All of these things work to completely reset the market cycle to a degree. And remember, typically the stock market and mainstream markets tend to go bullish for a significant period of time, years and years, not just months like in crypto. So this is really important to understand that there is quite a bit of data supporting that we are not in a late cycle type market yet. And we've seen this with the pain in altcoins. Why has it felt so different? Our altcoins aren't pumping. The large caps aren't pumping. There's no degeneracy. There's no fun. That is what's coming with a late cycle, with the euphoria and the belief that all of these coins just can't stop going up. And you can see this is even further supported with this altcoin season index, right? Which you can see has barely, it's definitely not an altcoin season yet. It's only at a 65. You can see that it's been reversing ever since the bottom here in July. But a real altcoin season here, like we saw in what is this, late 2022, and of course May of 2021, the giga alt season that we saw in the Q2 of 2021, we're not anywhere close to these readings, right? And so to get back up there, this is part of this flip that we're looking to see. And again, I highly suggest you follow me on X for bangers such like this. If you guys see total 3 here, as I'm saying, this is the chart of total 3 over the last 4 years or so, dating back to the top of 2021. Does that look like a bearish chart to you? This is all the altcoins except for Bitcoin and Ethereum. This is what the chart looks like. And it looks like it wants to literally explode upwards. This is a very bullish chart. Does it have to break up today? No. But this does not look like something that wants to go down. There's an increasing trend and it's coming up on prior all-time highs. It is a beautiful trend that I hope to see explode. So this is screaming that alt season is coming soon. And the reason why I want you guys to be aware of this is not just a crypto thing. Here is the iShares Russell 2000 ETF. This is essentially tracking all of the stocks, the small cap stocks in the tech sector. And what you can see here is that it looks to me almost identical to what happened right here on November 20th before we had an explosion of value, very similar to what we saw in crypto, where you have the small cap stock index in the mainstream stock market. What did it do? On November 20th of 2020, it exploded up about, 50% between that and a year later. And it topped almost exactly to the day where we topped in crypto. It was Wednesday. It was the middle, October 9th. We topped in crypto on Bitcoin topped in 2021 on November 11th. So we have November 9th versus 11th. This is a great comparable to the crypto market. And what you can see here is, to me, you had a test pretty much of the all-time high here. You have prior all-time high, a near test, and now you see the explosion up here. What do we see here? Prior all-time high, another test, and then hopefully we see the explosion up here. Now, I don't know exactly how high this will go, but I'm just trying to share with you that this isn't just a crypto in a bubble thing. This is the risk factor across the economy that's dictated very clearly by the rate changes in the economy. The way the Fed dictates policy dictates the amount of risk that people take. So as you can see, this 9-month lead RHS, the percent of central banks cutting, not just the Fed, but around the world, this blue line with a 9-month lead, you can see is pushing way up. And that white line follows the blue line. You can see that the white line always follows the blue line. So what we will see is the sentiment index will increase, will improve with time here into the very near future. So when you see the Russell 2000 index, and you can see this divided by the S&P 500, right? And what that'll get you, and I saw this on Rand's show, he did this comparison, but you can see here, this looks like, to me, it could be the beginnings of a bottom here, where for the last 4 years, right, since the top of May of 2021, it's just been a downtrend. But what we might be seeing here is a double bottom here and a reversal. So we could see here that this might be the beginning of the uptrend back. If this is the case, then it means that not only are we in alt season here in crypto land, but that the entire economy is entering into its own alt season, where money moves out on the risk curve, where all of a sudden parking money in treasury bills is no longer profitable. Parking money in the Mag 7 is no longer desirable, but actually moving out into more aggressive, more interesting tech stocks, altcoins, more degenerate risk. That is what is coming. And I believe we are going to see 2021 on steroids, because it is the first time that we have the stock market backing the crypto markets, that we have regulatory clarity, that we have actually the full US economy able to pour into crypto with very little friction. And there is still some friction, but it's crumbling away. The big bazooka cannon of money can effectively be pointed at crypto when the animal spirits show up. And what I'm trying to say is they're knocking on the door because of cooling inflation, because of rate cuts, because of demand for the 10-year, and because of sentiment in the overall business cycle. Now, this gets really interesting when we look at Dogecoin, and I'll explain it really clearly here. Since 2025 began, Dogecoin has been in this consolidation. It's broken this first diagonal, and it's just broken this second diagonal that it's been consolidating in here. Now, again, the TA looks good, but what's really important that you know is, of course, you already know that Doge is the king of all memes. But what you should know is that Doge is actually bigger than all that. Because if you remember last cycle, Doge was the coin that went viral. It was the Elon Musk coin. It was the TikTok trend. It was the meme coin that brought tons of people into crypto. It was NFTs. It was Dogecoin. It was Ethereum. Those were the core assets that people held in the last cycle. And as you can see here, the YouTube views, total new YouTube views, you can see this white line here. It's a little tricky to see, but you can see it. This white line peaked almost exactly to the day that Dogecoin peaked. So the white line is the Dogecoin price, and all of the multicolored lines are the YouTube views. And you can see that even though price in different altcoins and total market cap edged higher in late 2021, because Dogecoin had peaked in May of 2021, actually total YouTube views came down. And you can see that when Dogecoin's price exploded back up here in December of 2024, we got a huge resurgence in views. And this, my friends, to me is a cheat code. By understanding that Dogecoin's price is so highly correlated to the actual YouTube views, aka the retail interest in crypto, aka alt season. Now, a quick shout out to Blofin. If you guys are looking for a place that you can trade all kinds of exotic futures products, you can long and short Bitcoin and all kinds of altcoins with leverage, obviously significantly more risky, so you got to know what you're doing. You can get a 10% trading cash back bonus with Blofin. It's only valid here for the next few days. So if you've not already signed up for Blofin, this is a perfect time to check them out. Again, this is my derivatives trading platform of choice from when I want to get a little extra leverage on the market. Again, as altcoin season flips onwards and upwards, I'm going to be longing alts on leverage to get some degen upside exposure. That's how I do it. But again, I have a very high risk tolerance. If you want to trade, check out some of the greats, Crown, Brandon Hong. And as I said, over the next few months, I'm going to be choosing the best of the best trading on this link to join me in a private chat to discuss all kinds of things with the market. It's going to be a very unique opportunity, as well as I'm going to be giving out 100,000 super tokens to people trading on my link and specifically the best traders within it. So don't miss out on this bonus, and shout out to Blofin for partnering with the channel. So now you get it. This isn't just a crypto thing. This is the entire economy that's been stuck in risk off mode, that has a record amount of money in money markets, that has a record amount of money in just 7 stocks, that has a record amount of money in Bitcoin, that we are now going to see that money start to spread out through the risk curve as rates come down and as risk returns to the economy. So while you have accommodative Fed policy, you're going to start seeing news updates like this saying that the SEC will ensure that capital can be raised on chain, saying that effectively they want to enable a super app trading platform and innovation in their keynote speech. Again, on-chain trading, on-chain capital formation is where the super apps of tomorrow are going to be formed. And believe me, we have a plan here as another week has gone by and another $1 billion in volume has passed through this very young DEX project, Black Hole. And I'm going to explain how all the dots connect here. Because we're seeing some downright crazy announcements, like Binance partnering with Franklin Templeton to build, quote, tailored digital asset initiatives. I'm assuming ETFs, buckets of altcoins, different ways to invest in crypto through Binance. Hey, it's not a bad thing. And it will, once again, just open up a direct funnel into the assets without the ETF wrappers and these other things. This is very, very cool. And again, Binance opening up to US is amazing. So now I want to be very clear here. This is the portfolio breakdown that we've been going with. Over time, though, these will shift because I'm not expecting for Bitcoin to outpace the altcoins anymore. But I just want to be clear. I go over this all the time, especially if you're new here. The actual breakdowns of how many altcoins you should have in your portfolio, even if they're very, very exciting, should be in very specific ratios to your overall portfolio. With Bitcoin, ETH, Sol, Hype, Coin, Robinhood, these types of mainstream assets should be dominating your portfolio, along with what I call revenue and attention tokens. I had Alt L1 here. I've now gotten rid of my alternative L1 and I've put it into revenue coins because these are actually taking the place of the alternative L1 coins. And these revenue coins are about tokens that do buybacks and tokens that have revenue that goes straight to their holders. It's pretty much the same thing. If you're getting money funneled to you by the token, either in the form of buybacks or in the form of revenue flowing through to token holders, these are the key assets. And then you also have attention tokens, which have fallen completely out of vogue because of how bad the alt season indicators have been. But these are the meme altcoins, the gaming coins, the AI coins. These coins, when they come back into vogue, will be explosive with gains. And I just have cash here because you just want some cash, because you never know. Crashes happen all the time. You want some cash on hand. So all of this should actually represent 75%, but I have it just broken down to 100%. It's easier for me. And then cash on the side should be, a third of what you see here. So anyway, this is the way that I try to aspire to have my portfolio. And when I start listing all of these crazy coins in the DeFi space, in the meme coin space, which I will go into those coins later, these are all just alt season explosive types of assets, but they should all fit within, in my opinion, these allocations. So this is absolutely critical. Most people in crypto lose because they refuse to allocate assets properly. When you think about asset allocation percentages, think about it like this. Aporia, as you guys know, one of my favorite analysts in the space, has been crushing it and said, look, I can't stress this point enough, because it's something I always circle back to as a trader. Your job is not to predict the market. Your job is to manage risk. That means that the outcome of any single trade should never be the standard by which you judge it. The true measure lies in the quality of the decision that you made at the time, based on the information, probabilities, and risk reward parameters you had in front of you. Now, that might sound like a bunch of gobbledygook, but here is the kicker of the tweet. The moment you enter a trade, the outcome must be irrelevant, because what matters is that you know why you entered, what risks you're accepting, what rewards you're seeking, and the probabilities you're playing. If you've done that with clarity, then it's a good trade, regardless of whether it wins or loses. Now, the translation for the simple output of this tweet is that you should be essentially allocating to specific assets, knowing what you expect from them, but also knowing the probabilities that that trade will work out. And that dictates also the percentage of money that you allocate to that trade. Meaning, if you're going to long an altcoin versus Bitcoin, you should actually be weighting the amount of money you put into those differently, because the chance of that altcoin exploding is less than the chance of Bitcoin exploding, right? The chance of Bitcoin losing money in the long term versus that altcoin is much less, which is why people put more of their money into Bitcoin. So understand, actually, there's no such thing as a bad trade. There's a riskier and less risky trade, and there's probabilities. But if you've considered all those and entered with clarity, and you know the risks and the outcomes that you're looking for, then it's a good trade, even if you win or lose, because you should take trades based on probabilities, risk, and potential outcomes. And once you understand those, you can take the trades. A lot of people in crypto just YOLO into random altcoins, not understanding those key levers. So if you understand, hey, how likely is it that this trade plays out? Hey, what is the potential for gains here? How much of my portfolio should I risk on this? And once you make those decisions, there's no such thing as a bad trade if you're happy with your decisions there. Now, if you're unhappy with your decisions there, that's where the bad trade comes in, because in the end, we can't predict the market, but we can use these probabilities to make good decisions. That's why you see 70% of our crypto portfolio is in major and dominant assets, with another 30% in more degenerate fun assets. Obviously, I'm a founder of multiple protocols in the space, even though I famously have never sold a super token from my founders tokens. Obviously, my personal portfolio is going to look a little different because I am a founder, I'm an entrepreneur. But in reality, as a trader, as a speculator, which is the point of this channel, this is where you can win, is by having a clear understanding of odds, probabilities, risk, and outcome. Once you have those clear, you can take bets. But until you have those clear, you should be very careful. Especially if you're new here, you're probably not actually qualified to make those bets. Now, that being said, let's talk about some altcoin action. Because as you can see here, what I said is that we'll want to see majors perform. And I've been beating the drum that Avalanche, AVAX, is going to explode here for the last several months. And you can see that it's finally broken a 213-day consolidation. This 213-day consolidation under this sort of $27 mark, you can see that it's kind of air here until the mid 50s and then the mid 60s. And again, I'm expecting that if we get a really crazy alt season, that this thing could very well challenge its prior all-time highs, potentially put in a new one, depending on how wet and wild this thing gets. But pretty safe to see that we'll at least see a double up here of AVAX, hopefully breaking through into this range, if not going much, much higher. I would hope to see it at least tag this $100 range by sometime in 2026. Now, what we've seen here is that there's there's been an explosion of volume. You can see here that the volume here on AVAX has actually been trending upwards over the last several months. And again, you can see how much higher it was back in 2023 and 2024 when the prices were higher. And quite frankly, this is just super bullish for Black Hole, which continues to benefit from all of these flows as the dominant DEX on Avalanche. And your only way to tap into the revenue being generated by this on-chain ecosystem. Now, also in the altcoin space, we had a pump fund coming back from the dead here of, 2.5, I guess, 0.2 cents up to, well over their ICO price. So that is showing that there is now demand once again in the Launchpad space, and people are favoring a pump return. I don't love that this is what's happening, but this is what's happening. And also you see Solana, since it made its low of about $100, I think it even went under 100 back in Q2. It's just been almost up only here. So you can see Solana is making an extremely strong comeback here. This has been largely under discussed, but it shows to me that, this Launchpad narrative, which I don't want to be betting on meme coins. I do think there's some value in betting on these Launchpads, though it is a crowded space. It's just something to have on your radar. As you can see, Solana, the official Solana Twitter, just retweeted the Soar Launchpad, which is a new competitor to Pump Fund. And you can see here, they're, talking about flywheels. They're talking about essentially giving back control to founders and the founder reality. And this is the truth, is that it's really tough to launch things in crypto because the founders just get absolutely roasted. But anyway, keep your eye on the Launchpad space, and shout out to Soar for partnering with the channel. Again, there's a ton of these Launchpads, but it's interesting to see how this space will develop. Now, just looking at the coins that have pumped over the last 7 days, you can see RWA's Plume, World has been going crazy. Hyperliquid is at all-time highs. You see some AI coins, Pudgy Penguins has been on an absolute rampage. And then you see Avalanche, which is one of the majors. Again, I think it's really important that we see majors take off first. But in this video, I'm not going to be giving you my entire list of coins. But when I do those lists of coins, you have to understand that the ideal flow here is that we see a really robust major altcoin season first, with things like Ethereum, things like Avalanche, BNB, Solana, Hyperliquid, etc. Those coins should go absolutely bananas, and then we should see rotations down into the riskier stuff. And that's where you'll see the hallowed 10, 20, 30, 50, and 100x plus. That's when you'll see the trenches go crazy. That's when you'll see meme coins, gaming coins, NFTs, you name it. It's all going to go bananas once risk fully rotates. But it's important to realize the process has been very slow because of the Federal Reserve, because of the structural pain that has been inflicted by artificially high rates and the extreme stubbornness of Jerome Powell at the Fed. Coming up, we will be diving into specific altcoin sectors, especially as we see the rate cuts happen and the liquidity flow. You could get ahead of that, but again, timing has been the fickle thing here. Now, my bags are already packed. I'm sure a lot of bags are already packed on this channel. So if that's you, I just hold tight. But if you're looking to get new positions in altcoins, let's just go ahead and see what happens with the September rate cut. Let's see what happens with the markets. But I do believe that Q4 is shaping up for some serious strength in crypto land. And I'm also a big believer that we will see this market cycle extend at least a little bit, if not quite significantly beyond Q4 2025. I personally think that there's gas to get us into middle of 2026, depending on how this goes. But again, we'll play it day by day, week by week. And I hope you guys enjoyed this episode. If you did, destroy that like button. Make sure to subscribe with the bell notification on, because we're going to be coming out with some time-sensitive altcoin videos that you're not going to want to miss, especially as these numbers heat up and hundreds of thousands, maybe even billions of people are watching the EllioTrades channel. That would be exciting. But if you enjoyed this video, make sure to click on this one popping up, as I'm sure you'll love it.